If you're a landlord in the UK, big changes are coming to the way that you report your income to HMRC. It's called Making Tax Digital for Income Tax, or MTD. And for many landlords, it will completely change how tax returns are done. In this video, we break down what MTD actually means and who it applies to, when it starts, and what you need to do to stay compliant. Whether you have one property or a growing portfolio, this guide will help you prepare with confidence and avoid unnecessary penalties. Making Tax Digital is a government initiative to modernise the tax system by requiring businesses to keep and submit records of their property income and allowable expenses digitally. If you fall under the remit of the scheme, you will need to use government-approved software to file your tax return digitally. Initially, only landlords with a qualifying annual income of £50,000 or more from property or self-employment are affected, but over time this will extend to most landlords. By 2028, most unincorporated landlords who earn more than £20,000 a year from both properties and self-employment combined, and pay tax via self-assessment, will be affected, with the compliance dates depending on that income. From 2026, landlords with qualifying annual gross income of £50,000 or more from property or self-employment will find themselves in scope of MTD. From 2027, the threshold is reduced to £30,000, and from 2028, the new rules will apply to landlords with a qualifying income of £20,000 or more. This means that if you declare a qualifying income of £50,000 or more from property or self-employment in the 24-25 financial year, you will need to start using Making Tax Digital for income tax from April 2026. Only self-employed income and rental income is included in the above figure. Employment and pensions are not included. Qualifying income does not include income generated in a limited company, which is subject to corporations tax, or in relation to some partnerships. Records for self-employment income will need to be kept separate. What is qualifying income? Your qualifying income is the total income you receive in a tax year from self-employment and property. Your total income may come from more than one source of self-employment or property income. Other sources of income do not count towards your qualifying income, such as income from employment, your share of profit from a partnership as an individual partner, dividends including those from your own company, a state pension, private pensions. To assess your qualifying income for a tax year, HMRC will look at the self-assessment tax return that you submitted in a previous tax year. For example, your gross income could be £25,000 from rental income, £27,000 from self-employment income. In this example, your total qualifying income would be £52,000. If HMRC review your return and find your income is above the relevant threshold, they will write to you confirming that you need to use Making Tax Digital for income tax by the start of the next tax year. With MTD for income tax on the horizon, the single most important question you need to answer is my income high enough to be affected? To find out, you need to understand your qualifying income. Let's break it down into two parts, looking at what's in and out for MTD purposes. Your qualifying income is made up of your gross earnings from these specific areas. First, self-employment. If you're a sole trader, every penny your business receives from its activities goes into the pot. That means freelance fees, consultancy income, or money from sales that you get before you pay for expenses like stock, travel, or insurance. Next, property income. This includes all the rental income you receive from both UK and overseas properties. This includes residential lets, commercial lets, and furnished holiday lets. But remember, it's only your share of the property income that counts. If you own 50% of a property or property portfolio, or only have a 50% interest in it for tax purposes, only your share of the income counts towards your qualifying income. Finally, some more niche types of income. Trust income counts if it's from a bare trust or an interest in possession trust, where the income is paid directly to you. UK land transactions, i.e. trading, count if the activity continues over more than one tax year. Once you've identified all of your qualifying income streams, you need to combine them. If you have multiple sole trader businesses, add their turnovers together too, to get to your total qualifying income. For instance, if you are both a sole trader and a landlord and earn £45,000 from freelancing and £10,000 from renting out a property, your total qualifying income for the threshold is £55,000. Previously, we covered what is included, but just as importantly, you need to know what to exclude from your calculations of qualifying income. There are many other types of income that do not count towards MTD, no matter how much you earn. When totaling your qualifying income for MTD, do not include income from employment, if you have a job and your tax is deducted through PAYE by your employer, That salary is not part of your qualifying income. Dividends and savings. This includes income from shares you hold, bank interest you earn, or any gains from ISAs. Pensions, state, occupational, or private pension payments are all excluded. Partnership income. It's important to note that your share of profits from a partnership is currently excluded from this initial phase of the MTD rollout. And capital gains. This is money you make from selling personal or business assets, like a second home or shares. Rental income from a property counts as qualifying income, but the profit you make from selling that same property does not. To summarise, MTD focuses on the income you actively generate from your own trade or from letting property. It does not look at investment income, salary for employment, or one-off capital gains. Nor does it include income generated by a limited company that is liable for corporations tax, even if this is rental income. Most landlords will be able to handle making tax digital for income tax themselves, as long as you familiarise yourselves with the official guidance and sign up to compatible making tax digital software. We encourage you to start learning about the new requirement early. The government has also released an official Making Tax Digital for Income Tax toolkit to help landlords and letting agents prepare. This HMRC toolkit includes an overview of the changes, who's affected and how to prepare, links to detailed guidance, frequently asked questions, communication resources such as agent checklists, videos and printable posters. Even more landlord-specific information is available on the NRLA website at nrla.org.uk via our MTD hub. To use MTD, your software must be compatible with HMRC's systems. It should be able to maintain digital business records in line with regulations, communicate with HMRC Digital through their API, prepare and send quarterly updates from your records, prepare and submit your end-of-year declaration. You can check whether your software is compatible through HMRC's website. You can start preparing now by signing into Portfolio, uploading your properties and connecting your bank accounts using the open banking technology. HMRC will review your self-assessment tax return and check your qualifying income each tax year. If your income is above the relevant threshold, HMRC will write to you confirming that you need to start using MTD for income tax by the start of the next upcoming tax year. For example, if HMRC review your return and find your qualifying income for the 24-25 tax year is over £50,000, they will write to you and confirm that you need to start using MTD for income tax by the 6th of April 2026. If you think you will have to use MTD, you can now sign up on the Gov.uk website. You will need to use the same user ID and password you were issued when you registered for self-assessment. You might also be asked to provide further proof of your identity to use this service. You can do this by using an app on your mobile phone to match a photo of your face to your passport or driving licence, answering questions about information HMRC already holds about your identity, for example passport, credit reference, driving licence, self-assessment, latest P60 or a recent payslip. To comply with MTD, you will need reporting software that allows you to create, store and correct digital records, send quarterly updates and submit a final declaration each year. The NRLA is developing a new feature within its portfolio property management software to help landlords meet these requirements. This feature will be ready ahead of the April 2026 start date. You can begin preparing now by signing into Portfolio, uploading your properties and connecting your bank account using open banking. There are many different exemptions available to landlords, some permanent, some temporary. The main exemptions are income exemptions, if your qualifying income is below the threshold for the relevant year of making tax digital. Digital exclusion, which is decided on a case-by-case basis by HMRC. Temporary exemptions until 2027, which is most likely decided on if certain relief was claimed, such as averaging relief or care relief. And there are also other exclusions which exempt you from using MTD, such as being a trustee or a personal representative of someone who has died. We have a handy guide linked below outlining these exemptions. You or your agent need to create and store digital records of your self-employment and property income and expenses. You must also continue keeping records as normal for self-assessment. For example, you still need to keep original records or supporting documents, or copies of them, that you have used to prepare your tax return. Every 3 months, your MTD software will add together your digital records for each business that you have, to create totals for each income and expense category. These are known as quarterly updates. If you began MTD in April 2026, these updates would take place according to the following schedule, with a final declaration due by the 31st of January 2028. Don't forget that you will also need to submit a self-assessment tax return in the usual way for the previous tax year. For example, if you started using MTD in April 2026 for the 26-27 tax year, you will still need to submit a self-assessment tax return for the 25-26 tax year. Change can feel uncomfortable, especially when it affects your income, your records, and your responsibilities as a landlord, but you do not have to face MTD on your own. With the right support, the right tools, and clear guidance, this change can become something you feel confident about, not worried by. That is where the NRLA can support you. From practical training and trusted resources to tools designed specifically for landlords, you can move into this new system knowing you are doing things the right way. If you're not already a member, now is the time to join our community that stands behind you, gives you clarity, and helps you stay compliant with confidence.